evening, everyone. Tonight is going to be the start of the budget. Mr. Hull, would you like to get us going?
First of all, just to start it off, we'll know from last night's presentation, if any of you had an opportunity to see it on TV, that the total budget that's proposed this year is $120,817,437, which represents an increase of a little under 4%, $4.6 million. On the first page, it provides the breakdown of the major categories of expenses. The school department being on the upper end there at 4.25% increase. Shared costs, which are the insurance categories, the various statutory charges, debt and interest. That's the next major category of expenditures. That's increasing 5.18%. General government 1.92%. And then the Shawshene Tech is 5%. Unless you would like me to go through an overview of the presentation last night, we can just get right to the first page of the budget book. I guess I would say that some of the major categories that you'll see in the budget on the town side, and we can certainly talk about this later when we meet with the individual departments, but with regard to shared costs, the retirement assessment is going up $513,000, which is certainly a significant increase. One of the other categories of increase is the trash and recycling. Again, we can talk more specifically about that with Mike Woods, but this is an issue we've talked about here with this committee in the past about the challenges that are happening not only in Wilmington but really internationally with the issues associated with recycling. The current contract is due to expire at the end of the fiscal year. The existing contractor, Russell, was actually looking to terminate the contract this past year because of the increase in recycling costs. Their tip rate, or the tip rate, has gone up dramatically over the last couple of years. We basically agreed to assume the tipping rate 100%. Initially, we were assuming a portion of it, but in exchange for them continuing to serve us for this fiscal year, we're picking up the full tip rate, which is around $100 a ton at this point at Casella. And then at the end of this fiscal year, we're looking to switch to a new collection agent. So between that cost and the cost of a new 5-year agreement, which will be proposed for funding this year with the incinerator at North Andover, the overall cost there is $301,000, $301,148 to be exact. So those are a couple of the major cost increases, and then there's some personnel adds that again we can talk about as we go through them by department. The major categories, I think, of conversation, I suspect anyways, will be some of the capital items that I'm proposing, one being the funding of a feasibility study and schematic design for the senior center, another proposal being schematic design and feasibility study for a new town hall school admin building. We're looking to work with a budding property owner to the Wildwood Cemetery to increase the cemetery space. Those are some of the capital items, but we can talk about those as we get into them by department if you'd like.
Sounds good.
So with that, what kind of continue the practice that we've had in the past, I'll turn it over to Brian, our finance director, to lead you through the first several pages of the document.
Does that
That
The
doesn't
link's
even,
not working yet.
that's just demonstration only, that's fine. Thank you, Jeff. I just wanted to take a few moments to explain to the Finance Committee how we come to the figure Jeff referenced, 120,817,437. That's a number you will see throughout the budget here. That reflects the number for the revenue, which obviously not so coincidentally balances with the expenses that we'll catch up to a little bit later on in the book. For all practical purposes, I'd like to start on page 1 for available funds. I'm sure a lot of the committee here is pretty familiar with the way the budget book is laid out. It's laid out the same manner that Michael has been doing it for years. This is my first go through it, so I'm actually just going to go literally line by line for you and kind of walk you through everything here. When we're looking at the first item, the tax levy, the number I actually want to start with is a revised estimate for FY 2020. Back in November, when Karen was here, when we were getting the tax rate certified, the state, Mass DOR, certifies the tax rate for the town. When you look on pages 5 to 7, especially page 7 is going to show you the fiscal 2020 tax levy. That's the figure that had been certified by the Department of Revenue, the $87,073,370. That's right in the middle on page 7, and that's really the jumping off point for how we want to build the budget for FY 21. So moving back to page 5 is you're going to see how we calculate the tax levy limit. The state had certified a little over 8,717 million. It's right in the middle under actuals of FY 22. For the levy limit, our tax levy was a little bit below that. There was a little bit of capacity that we had at the end of, during FY 20, as far as the way the tax rate fell. When we're looking at the figures on how you calculate the levy for the next year, we have to start at the tax levy limit net of the debt exclusion. So that 84.2 million is basically the building blocks where we add on the 2.5% increase plus a projection of 1.1 million for new growth. And that's going to give us the 87.4 million. And then we have to add the exclusion back in. That's going to give us the 90.2 million that you see in FY 21 as the tax levy. And that's, as Jeff had mentioned last night, it's obviously the biggest component of our budget. It's the biggest source of funding that we have. The next piece, we have 9.4, almost 9.5 million listed under local receipts. That's going to go into more detail on page 8 of the budget. As has been a policy of the committee in the town for years, is these revenues are conservatively projected. The figures here, the only one that you will notice a noted increase is under motor vehicle excise, and that tends to increase as economic factors increase, more new vehicles and more, just a sheer number of vehicles increase, more vehicles are on the road, are then getting assessed and having motor vehicle excise collected on them. As you look through the rest of the items, almost everything else there is projected at basically level funding. The receipts tend to be a little bit more volatile than you'd imagine, but the bottom line number typically has been coming in pretty consistent. The one thing that is going to be important to notice is the next line, charge for service for sewer. That has always been its own separate item that does roll into the local receipts. However, last year, the sewer had been voted to become its own enterprise, so we have to strip out the 3 million plus that we get in receipts there. We're going to put that in its own separate enterprise fund, where the expenses, the assessment are all going to essentially reside in their own fund. So the expenses and the revenues get stripped out of that piece. That's one of the things that does skew the numbers a little bit when we start getting into the percentages and the year-over-year comparison. And that's why in the introduction from Jeff, the number of the 116 million had to have the sewer stripped out of there to give a pure apples-to-apples comparison of what the true growth was over the year. The local aid figure is also projected conservatively. That's explained in more depth on page 9. Due to the timing of the budget for the town, this is one that we have to typically rely on historical figures that we've had in the past. We build our budget, we build our projections out based on our best guess as to how history's trended for it. We also have have to keep our eye on the legislature and see if there's any changes and if anything does impact us. As Jeff talked about again last night, there's some change to the Chapter 70. It's going to impact more gateway cities more so than towns. We expect our funding to remain pretty constant, pretty stable. So we had the luxury of going through our first pass of this before the governor came up with his budget at the end of last week. Our numbers, again, as a practice, a little bit conservative. That does give us some leeway. And obviously the numbers the governor put out last week is still subject to the House and the Senate. And it's obviously far from a finished product on that end. But we want to still remain conservative, and our numbers do line up pretty well with the first pass. The $4.865 million from free cash is obviously, it's not the town certified free cash number. It's the number appropriated from the certified free cash to be using as a revenue source here. This number has been fairly consistent over the past couple of years. The makeup of the $4.8 million stems from $2.865 coming from capital projects, as Jeff had touched on, and $2 million for the warrant article for the capital stabilization. Over the past couple of years, the biggest majority of those funds had been dedicated to the warrant article for the capital stabilization. That's down from 4 to 2 this year, but the funding for capital projects has markedly increased.
What would this bring our balance down in free cash?
The free cash was just over 24 million when it was certified.
Okay.
So that's going to bring it down to about 19 and change, yeah.
And then get recertified in fall.
Exactly. And it's also worth noting that it's essentially moving 2 million into the stabilization. It's not, so that's going to be in a separate reserve fund held by the town as well.
Yeah.
The available funds from the water department are laid out in a little bit more detail on page 10. The water fund essentially is its own enterprise, but it had been handled through a special act decades ago, ahead of the curve before the DOR really started to go with enterprise fund. So it's everything except for being titled an enterprise fund, handled the same exact way. It's its own self-sustaining fund, and there is historical charges that have to be transferred to the general fund as those costs are bared by the general fund. A lot of it's through employees, through DPW, who are actually the water department employees. There's also debt service, as well as benefits. The next two pieces, sale of cemetery lots and the interest of the cemetery trust fund, are pieces that have been year over year voted to help supplement the service of the cemetery operations. The sale of cemetery lots is basically a revolving fund where the receipts from, it's pretty self-explanatory. The funds from lots go to help support the operations of it. And the cemetery trust fund is by most regards a non-expendable trust fund. There's a small portion that's expendable, typically just through the interest, and by that, the $20,000 a year is voted to be used to help support the operations of the cemetery. So that brings you to the magic number, the $120,817,437 that Jeff had touched on. And then if you look in the back, pages 80 through 85 is going to be basically a Cliff Notes summary of the meat of the bone, pages 15 through basically 79. It's going to be the summary of each department, how it slots in the function, and then the column for town manager recommendation for FY21 will show you the totals for each department, and that also then balances out to the $120 million figure.
Does anyone have any questions for Brian at this point? I have one.
Yes.
On local receipts, we have fees that are charged to residents and non-residents for various items. Are we competitive with the other towns? Are we low? Are we high? Or how our fees stack up?
That is something that we have not looked at in a few years, and I think we do need to look at whether there's an opportunity to perhaps adjust some of the fees. So I think we do need to look at where we stand
schedule?
relative to other communities.
Okay. Great, thank you. Anyone else have any? No? Okay, Brian. Do you have
All right.
more, or are you switching it back to Jeff?
So now let's see, we're page 8, sorry, page 6, right?
Page 6 was essentially a snapshot of the tax rate comparisons. This was shown in one slide last night. Some of the details also provided during the tax classification hearings, and it essentially highlights the split tax rate the town of Wilmington has adopted. It shows that the tax rate on the residential end is very competitive with most comparable towns in the area, and also highlighted by Jeff, the downside of that is the commercial split shows that Wilmington by rate has one of the highest rates in the area.
How's our vacancy rate on commercial?
I'd defer to Karen on that one.
Karen? How's our vacancy rate?
Absolutely, I mean, we've got a very low vacancy rate right now.
Great.
A lot of our warehouse space, we have a ton of warehouse space there, more than like office type space, and that's been very low. I think the developments in Boston, things are keep moving up the highway, and there's a high demand for our space, so vacancy.
Okay, so that rate really hasn't hurt us.
No, so we're doing good.
That's great. Thank you. Okay. Thank you.
Thank you. Yeah, and just the next piece of that is the product of the tax rate being split on page 7 shows by valuation, the residential properties make up about 77% of the community's values. However, when the tax rate's split to the degree it is, the tax rate from the residents bears only about 60% of the tax rate. The 40% of that's made up through commercial, industrial, and personal property. So that's that is the benefit of splitting the tax rate to the degree. The residents have a lower tax rate. Their tax burden is greatly reduced by result of that. We did already walk through the local receipts. If anyone has any questions, we could, oh, bless you. Page 9 again is just the detail on the local aid, explaining where we were from FY 18-19 projected through FY 20, and then our guess at this point, our estimate based on historical trends, what we've seen through the government already for FY 21. Page 10 is just simply the detail on the transfers to the general fund from the water department. Again, that outlines the debt, both principal and interest, that are bared by the general fund for water projects, the fringe benefits incurred by the general fund for water department employees, as well as the support staff and the insurance as well. Once we get to page 11, we take a first look at a very high level of the budget summary on the expenditure side. It's broken again out by the category of basically where the expenses fall. It's going to show the difference between the prior year as well as the percentage increase of the prior year. And again, you'll see under town manager recommends in FY 21, the grand total showing a balanced budget of $120.8 million. Page 12 is simply the graph just showing the outline of how it breaks out on a percentage basis between municipal is basically just pure governmental expenses. Education is the school as well as the technical school. Combined costs, as Jeff had touched on before, it's essentially the shared costs for the operation of the town between the town and the schools. And then the capital outlay and warrant articles are identified separately. Pages 13 and 14 are just a very high-level look at the FTE count for the town by department, as well as the historical trends since FY 15.
So just to note in that summary, you'll see under town manager, I'm looking to add a position here, which we can talk about in a few minutes. It would be a HR generalist position. Then under the police category, you'll see 2 additional positions there, recommending a patrol officer and a sergeant for that department. In public safety dispatch, looking to add 1 full-time dispatcher. And then in addition to that, actually going back to police for a second, in the police department, there is a recovery coach that's been funded for the last few years through a grant, That grant is due to expire in August, and my recommendation is that the town pick up the funding of that, which is a little over $17,400. So you'll see that that one additional part-time position there. The other adjustment with regard to staffing in the elderly services, you'll see that we're going from 4.5 to 5.5. There's actually a position that has been funded through a grant, elderly services grant. We're increasing the hours from 30 to 35, and as a consequence, and we're going to assume some of the cost of that funding, so we will, the number is increasing there to
Well,
5.5.
Jeff, didn't last year we approve a half-time person for elderly and half-time persons for veterans?
Yes.
Okay, and how, so that person's no longer going to be with elderly?
Well, that person is still included. It's
In the
shared by
5.5? Okay.
it's shared by elderly and veterans.
Okay.
Yep.
Mm.
All right, so going
Page
into
15.
to page 15 is really the first of the budgets. The amount under recording secretary, this is the cost for the coverage of the selectmen's meetings, and the increase there is 2.75%. It's essentially Beverly Dalton is the secretary to the Board of Selectmen, and that covers her cost. In addition to that, the under contractual services, miscellaneous, that cost did go up a couple $100. It pays for the Mass Municipal Association dues, which a little under $5,000 at this point. Selectmen expenses, which is $1,250, and then some minor miscellaneous items. We provide a Good Guy Bowl each year as part of the Good Guy Award, and some costs associated with parking for selectmen and other, if they have to go into a Mass Municipal meeting, and that covers those costs. Printing and binding, we have the $33.50, which covers the town topics, which, as you know, is a quarterly publication. And then we have $1,200, which is for advertising associated with any street acceptances that may come up, the warrant articles, the posting for them, tax classification, and other legal notices that the Board of Selectmen may need to post. Page 16, which is elections, my suggestion is that we take that up with Tina Conway, the town clerk, since that is election related, and she can speak to the costs associated with our upcoming elections. And again, the register of voters, that is part and parcel of the town clerk's office. The finance committee budget, unfortunately, this one's skyrocketing out of sight. So on this one, the actually one of the more economical departments, the Breakdown here, $8,000. Well, first of all, the recording secretary, clearly that's Christine for covering the minutes. Printing and binding, the $8,000 is attributed to the publication of the warrant books and the posting associated with getting those mailed out to residents in advance of the town meeting. Public hearing advertising costs. And let's see, also we've got a small amount in there in the event of advertising for a special town meeting. Pretty much covers the $8,000. And then the $300 is the dues for the Mass Association of Town Finance committees. And then a small amount for training and conferences. And then the $25 is just really for the nameplates for members.
That's good.
Next is the town manager's budget, and the first category is salary. So this reflects my salary, my contracted salary amount. My contract runs from October 1st to September 30th. And then separate from that is the cost for the other personnel in the office. We have one individual, Christine, who is a member of the ASME 2 unit, and then the other members of the group, Wendy Martinello, Carrie Dalton, and Carrie are all non-represented, and it reflects a salary adjustment for them in the amount of 2.75%, which is the amount granted to non-represented effective 7/1. And here you'll see we're increasing, or proposing to increase the staffing by 1, and we're looking to bring on an HR generalist. As I talked about last night, the amount of hiring that we're doing is really stepped up in the last year, 18 months. We have a number of retirements, which has led to this, obviously, not so much in the way of outright turnover, but I'm going to ask Carrie to speak to it to some measure. One of the things I would just note is that many communities our size have standalone HR departments. They'll have an HR director and a couple of staff. The situation that we have, Carrie is, of course, assistant town manager and HR director, so she does a lot of HR work amongst other work that isn't HR related. Our payroll benefits person does HR work as well, and what we're finding, at least under the current system we have, is that payroll is could be a standalone job on its own. And then Wendy Martinello in our office is involved in purchasing as well as HR. So we've got 3 different people that are taking on bits and pieces, and the hope is to have a generalist to take on some particular responsibilities. You want to talk about that, Carrie?
Sure, I'd be glad to. I just looked at some numbers, just to give you an idea of the volumes that we have in the office. We have a weekly payroll. Town side is about 300 people on average every week, and then we have all the seasonal fluctuations with senior tax workers, the summer help, the recreation, seasonal help, election workers. So there's constantly new people coming in that we need to enroll in, have them fill out their forms for taxes, for withholdings, get their I-9. So there's always a process of having new people come in and having someone sit with them to process their paperwork so that they can legitimately be an employee of the town. The school side has about 630 employees on a regular basis. And then we have all of our multiple retirees that we also deal with, because we have open enrollments for our retirees for health insurance every year, regardless of whether they're town or school employees. Once they retire, or once they're approaching retirement, we transition them to retirement, and we manage their healthcare deductions through retirement, and make sure that when they're reaching age 65 or their spouse is reaching age 65, they get onto Medicare. So it's a lot of discussion with retirees and sometimes employees if they're turning 65. So there are a lot of things happening with that population of people. In 2019, we had 47 job postings. 2018, we had 27. So the volumes are up. We have a lot of people retiring right now, some resignations also. Retirements on the town side in 2019 were 13 as compared to 8 in the prior year. And I've started to track on a calendar year basis retirees from school and town, because I have to deal with the school people too, to make sure that their deductions are taken from Mass teachers or Middlesex County Retirement if they're an aide or an assistant of some sort. So far this year, we've had 3 people retire in January, 2 more are planned this month, and I have 22 through June. So the volumes are just skyrocketing of the people that we're dealing with. We doubled the resignations. 2019 we had 12, 2018 we had 6. FMLAs, which Wendy Martinello helps with a lot of the FMLA paperwork, workers' comp, 111F, that's primarily what she focuses on, in addition to the offer letters that are given to people, and she also tracks all the accruals for people on a weekly basis. So FMLAs, we had 21 in 2019. 2018, we had 8. We also administer all the death benefits for the life insurance policies for people who were prior employees and continue to have the life insurance policy. So we had 16 of those in 2019. Workers' comp, we had 28 people in 2019. 2018, we had 18. 111F is the only positive number I have. We had 16 in 2019 and 20 in 2018. So it's just a lot of volume of people, and they're growing by leaps and bounds.
Do we have a sense, just if you look at the aggregate of our workforce right now, does some percentage of them like at or near retirement age, or sort of within that zone?
I've never run the numbers, but I think just knowing the people now,
Yeah.
I can see there are a lot more people who will be retiring within the next 5 years, I'd say.
Oh, yeah, it's a big.
You know, I haven't run an aging report out of our software, but there are a lot of people who could retire now if they wanted to.
That might be a
and
good thing to
number who are
do.
approaching.
Is do an aging.
Yeah.
You know, just get a heads up as
Because I
to.
would assume there'd be some connection there between that and our pension liability and some other things that you're adding in, taking out from
Some
that.
of it, yeah, some of it's positive, and then and some of it helps us, because if they really retire and are Medicare eligible, then they're
Yeah.
going on Medicare and a medic supplement, and we're not self-funded for those plans, so that saves us
Yeah.
money. So there's some pro and con, but when you think about it, you've got a retired person who's staying on the insurance, and then you're backfilling with
Right.
another person. So you're adding, you're
Adding
constantly adding people.
Mhm.
So those are part of the reasons that we're requesting an additional person. We still have to manage the Affordable Care Act on a monthly basis and issue the 1095s because we're self-funded. I'm very gracious to Pam McKenzie because she did the whole report for us this past year, but you know, that's over and above what she should be doing. It really needs to come back into an HR role. We need to be updating this every month, getting the census from Blue Cross and updating our spreadsheet. So that's one thing I would think that this person, if it's approved at town meeting, would be doing. They certainly would help with onboarding new employees because of the volume of people, helping with separations, because right now I handle most of the separation paperwork. sign people up for COBRA, and I give the deduction reports every month to mass teachers and county retirement. So there are a lot of things that I'm doing that really could be pushed down a bit if we had a person, and that would free me up to be doing things that I should be looking at, like what can we do to help reduce insurance costs and things like that. I should be looking at more strategic projects on a daily basis. Another thing is employment verifications. Everybody's refinancing. I get so many of those, and I do them myself, so, because I don't have anyone to give them to. So there are a lot of things that could be pushed down. We also have a Mass Municipal Personnel Association, or it used to be MMPA, now it's MMHR, because they like the term human resources. There's a lot of queries that come out. Can you tell us how many people you have in this position, what do you pay them? And it's all sharing of information. And I feel bad right now, we can't give that information because we just don't have the time to do that. But it's really an association that we should be supporting. And if we had a person to spend a little bit of time on it, it's not gonna be the major part of their job, but we should be supporting that association with this position. And then another brand new thing that just started in January of 2019 is we have a new drug and alcohol clearinghouse that we will need to go into. It's a national thing. We need to go in and we need to look at everybody who has a CDL license within the town and all new people who will be driving with a CDL, and make sure that they don't have any drug or alcohol violations in their history. So that's something that has to be done within Human Resources because of HIPAA. But then we'll also need to determine, okay, what's our policy related to that? So that adds another thing that will need to be done. So those are just, I think, the tip of the iceberg of why we're asking for this position, and the kinds of things that it would free me up to do, like work on a policy and support Jeff for more strategic things, or support the finance committee and say, this is what we're trying to do going forward with some of these high expenses that we have.
Another key area that I think we really need to be doing more of is auditing some of these invoices to make sure that people that we're paying, we're paying for are actually on the benefit and haven't, retired. And occasionally, and I know Pam has done some of this in the past, and we pick up instances where we've been paying for someone who's no longer on a policy for some period of time. So to be able to do that on a more regular basis is going to save us some money.
Does the software and application have an HR component to it? Is there an HR module that we have?
Not really. We have a payroll module and then we have an accrual module. When we were looking at Munis, there is much more of an onboarding, which I
That's what I'm
haven't
thinking of,
seen
yeah.
yet. I'm very interested, Brian and I have been talking about, we're very interested in seeing it. We'll be starting to work on the payroll module soon.
Yeah.
We're started the discussion with Tyler. I would think within probably 2 months, the end of winter, beginning of spring, we'll really start working on looking at the payroll modules, getting things ready to be ready, hopefully for January 1st of next year to go live. So I'm interested to see that because I think it will help, and I think there'll be more
If you got a person, you
self-service.
got the data, you'll be able to do some things with it.
Yes,
Yeah.
and I think there'll be more self-service with benefits too, that people can look at, oh, what do we have for benefits that I can choose from, and maybe even sign themselves up. So we need to explore what Munis offers. I have not seen that module yet, but it sounds exciting for us. And certainly, it's just a challenge when you're in the midst of payroll and then you have to update deductions constantly too, so there are a lot of moving parts.
So the budgeted amount, or the requested amount here is $60,000.
And that's about an average. I
Is it?
looked at different towns, and for generalists, that's a good average amount.
Okay. Thank you.
So then, with regard to contractual services, under postage, printing, and advertising, it is pretty much as it's described. It's staying the same. covers all the mailing that not only our office, but all the offices here do. It also covers the postage associated with the real estate taxes, excise, covers the costs associated with the budget book, printing, the postage for the mail machine meter, legal advertising for bids, job descriptions, Federal Express, envelopes, letterhead, selectmen, binding of selectmen minutes, all get included under that category. And then under the next category, miscellaneous contractual services, this includes memberships to the Mass Municipal Personnel Association, the MCPPO, which is the purchasing group that I'm a part of, ICMA, International City Managers Association, which I'm a member of, Mass Municipal Managers Association, is covered under there. Our Pitney Bowes maintenance agreement, then we have dues for, well, the dues for the, as I mentioned, the ICMA is included in there. That's pretty much what is included in that category. Training and conference, ideally, it's nice to be able to get to a manager's conference now and again. It's been a little while since I've done that, but we do put money in there for either Carrie or I or other staff to get to various trainings. The Mass Municipal Human Resources Association does put on some very good training. There's a October conference, it used to be at Boxborough there, I forget now if it still is, but they have, and there's a labor relations session that they put on, so those things are, you know, helpful for us to be able to stay in touch with the latest changes in the law and legal cases and so on. Then the last category is $8,700 is office supplies, which is all the copy paper for the copiers and associated office materials that are provided in the office. The furnishings and equipment, curiously enough, we're looking to replace some chairs. These chairs are not the most comfortable. It does. The theory is that by having these kind of chairs, it facilitates fast meetings, but I don't know that that necessarily goes out. So there is a proposal to purchase 160 chairs, a fabric type of chair, which ideally is going to be more comfortable. That's at $5,500.
Excuse me, did you say 160 chairs?
Yes.
160, yeah, for the auditorium.
55.
Oh, the auditorium.
Yeah.
Okay. Thank you.
Yep. We're also looking to purchase a, it's called a fastback tape binding machine. So these documents that you see that are bound, the machine that we currently have is running out of steam, so to speak, and we're looking to purchase one of those for $4,500. And then we have the need to replace our stamp. We have a time stamp in the manager's office, and that I can't speak to the specifics of it. I know Christine and Wendy and others have used it, and it's, I think it's not functioning. I think part of the issue is that the clock or the date is not functioning the way it should, and my understanding is we've.
You have to have that.
Yeah, that's the whole purpose of
Yep.
the
Exactly.
timestamp, is to have a proper time, right?
Mhm.
So, the cost there is $455, so that's the estimate we've gotten. Is there any other questions?
Any questions on Angie's office?
Can you give us an update on the Muni system, where we're at? and-
Sure, I'm gonna turn that over to Brian,
Yeah.
because he's really the one that's running the show.
Sure, on Munis, we've been meeting with them regularly. I have calls scheduled with the project manager on a bi-weekly basis. They've been on site. They've had a consultant here a couple weeks ago, and they'll be back on site in February to work on a lot of the conversion files. We have the chart of accounts completed, imported, and in their training environment at this point. So the big next projects are defining the roles for the users and allowing permissions, so they can then begin to test the environment and honestly just see what they can break, see if they can do what they're supposed to do, and see if they can do stuff that they're not supposed to, so we can tighten and adjust their permissions to use the system as needed. Another big piece is updating, the conversion data.
That's huge.
Yes, yep. So we have historical data that slots in there as well. And then once you have the chart of accounts in there, you have your historical data and an updated and cleaned vendor file, is then you can start to really test the system and try and make sure that the report writing side of it is where it should be.
Yep.
There's also an IT end of it that John O'Neill's been working on as far as designing the forms and the layout and the look and the feel, everything that once it's generated, how it's supposed to look. So we still do have a lot of work, but we are staying on schedule and we're making progress.
What's the estimated?
It'll be July 1 for the GL.
Ready for the GL?
Yes,
July 1?
yep. So we're trying to use rational dates that are both realistic but also make sense. July 1 with the start of the GL makes sense, obviously, because it coincides with the fiscal year.
Is
And
the
then
payables gonna be up too?
the payroll,
The payables, you know, are you paying your bills through it?
no, the tax piece will be coming in later.
You mean
Your
vendor
accounts
bills?
The
payable.
Vendor
warrant
bills.
payables, you
Yeah.
know, when you.
Accounts payables, yes,
Yeah.
yes,
Okay.
yeah, yep, sorry.
It's all right.
Yep, and then the payroll piece will be designed to go live January 1. That just, it makes it a lot easier on the
W-2s.
reporting end of that, so.
Yeah.
And there's gonna be a lot of work on
Yes.
the design end and getting all the tables in. That'll be one of the biggest
I was
challenges
gonna
to
say
get
the
through.
Payroll is one of the hardest things you can do.
I
Yeah.
heard that.
Mhm.
Mhm.
But, well, just wanna make sure you lay it out,
Exactly.
and the design is there, and think about, like, all the different reports that you might wanna get. For instance, when we ask for how much overtime, you know, this guy worked, and, but, you know, this certain earnings codes and things
Mhm.
like that, if you think about how you lay it out, you could get that information. It's just,
So it's
it's a
gonna be
lot of,
important.
It's a lot of planning.
Inputs,
It
yeah.
is,
Yeah.
it
Yeah.
is, yes. And they told us that if we make bad decisions in the beginning and don't go through the effort to set people up with all
Yeah.
the information, you can't go backwards, or it's
Yeah.
very, very hard
It's
to.
hard, yeah. it is.
So we need to be very thoughtful about
Very
this.
thoughtful. Yeah, I think you're doing the right thing.
Kathy Godfrey, who's the payroll and benefits coordinator, and I are going to go out to Littleton because they
Mhm.
transitioned recently.
Okay.
And we want to meet with them and talk about what went well, what didn't go well. They had the 2 times that they moved out their schedule.
Mhm.
So we want to know ahead of time before we even start, what were the bumps.
And that's the thing, don't be afraid to say, I might need to move this out. You're
Mhm.
better off pushing it out than rushing and not getting it.
Right,
Yeah.
right. So we really want to be very thoughtful in the process, and thank you, Michelle, for that,
Mhm.
because
I totally
maybe I'll
get it.
call you too. Or you can direct me to someone.
Thank you.
Any other questions on Selectman? No, I'm sorry, town manager. Next.
Okay, we go to the back and look at this page. Page 60. Oh, we have one more? Oh,
Did we want to
what's
do,
that?
do we want to do the accountant's office,
Oh,
treasurer's?
sure, yeah, absolutely, sorry.
Yeah.
Skipping over, an accountant and treasurer. So, yeah. this,
On 23 would be the town accountant's office. Just to briefly walk through that budget, it's pretty consistent. The salaries, both for the finance director as well as the two employees, the assistant finance director and the accounting assistant in there, are purely based off their salary schedules.
So just to stop real quickly, one example of just the turnover, and, you know, it comes in waves, is the entire town accountant's office is completely new from last year. So obviously Brian, but Lorraine Herman, who was, you know, invaluable in terms of her institutional knowledge of how the processes worked, retired, semi-retired.
Yep.
She's retired, and Paula Berry, who was also in that office, just retired a couple weeks ago. So it's a completely new team there. So, but they'll do well.
Thank you. So yeah, the salaries, there's 3 new bodies over the course of, if you look at the FY19 budget through now, it's going to reflect 3 different salaries altogether for new people. The miscellaneous contractuals is down. It looks like a sizable chunk, and what that is that's strictly just the OPEB report and analysis that's on a every other year schedule. So we're in the off year for 21, so we just didn't need to obviously budget and account for that, for those funds, but they will be asked again for in 22. The training and conference is level funded from the year before. That is for both the MMAAA as well as the Eastern Mass flavor, that the EMMAAA, for both myself and for the assistant finance director to have membership to attend local meetings, trainings, as well as UMass. Exactly. The office supplies, again, that's just level funded at $1,000. A lot of it is typical costs you'd find within office, just to run operations, as well as for production of binders or storage, documenting, that sort of stuff that we need through the office. And the furnishings and equipment, we didn't have any capital requests for the year, that we had no furnishings to ask, so that was just as a 0 for FY21.
Thank you.
The next page on 24 is the treasurer collector's office. At a very high level, this is a similar story where there's no real steps. If I miss anything, Pam, feel free to jump in.
Well, so the senior clerk floater we hired last year has taken the assistant accounting position.
Yep, so we stole one body
So
from.
I had to hire a new person. She came to us from the town of Tewksbury, at a very skilled level, so we felt we needed to meet the salary she was making. She brings munis experience, very recent munis experience. She really has a lot of skill set on an assistant treasurer.
Yeah, and she's been doing the similar job for about a decade now.
That's the majority
Yeah.
of the increase in this, in my budget.
Thank you.
Yep, and again, that's reflected in the salary. Everyone's off of their respective salary grids. There's no new positions in that office. Once we start taking a look at miscellaneous contractual, it's a slight increase over the year before. The vast majority of it is for mail service, for printing, stuffing the mail, as well as for lockbox fees. Those two are $16,000 of the $19,000 of the budget. There's also service of the motor vehicle warrants, the archive storage, and then any return ACH check fees as well. Printing, advertising, binding, I believe that pretty much speaks for itself. A lot of the expenses the treasurer's office has relates to the bill forms for real estate, personal property, motor vehicle excise, as well as W-2s, 1099 forms at this time of year, and advertising, tax title, tailings, any sort of advertising that they are required to do out of that office.
And I would just point out, and I don't have the particular number, I don't know if you do, Pam, but the amount of collections that you've been able to bring in over the last year here for tax title.
I have it for this fiscal year to date. Since last July, we collected $731,000.
731.
That's good.
For tax title balance of $1.9 million, of which 1.327 are 21 e-sites. So it really kind of brings our tax title balance down to about $182,000. I haven't done 18 or 19 yet. That could be potentially another 300,000 that would go.
Nice.
Good.
The next item there, the equipment repairs, that's strictly just for the annual maintenance on the pressure sealer, for the mailings. Training and conference, that's also level funded. That's for all the respective Mass Collector Treasurer Association, registrations for conferences, dues, meetings, mileage, as well as for the Eastern Mass flavor of the Treasurer or Collector Treasurer Association. Office supplies is a slight increase from $1,200 to $1,250. Again, that's just purely on materials to help facilitate work for the office. The tax title fees, same, $27,000. That's also really just including the filing fees on any foreclosures. That's been a constant number.
Yep.
And then furnishing and equipment is $750, really just for the folding machine, correct?
We're gonna purchase a new one.
Yep.
The pressure sealing machine we have is the parts that are pretty much glued together. They're not replaceable parts, so, yeah. The manager's office purchased a new pressure sealing machine for just payroll, so this machine that I'm looking to purchase is just gonna be payroll bills.
Any questions for the Treasurer Collector's Office? Seeing none. Next.
And we'll skip over the town clerks for the time being. So that'll bring us to page 30, which is for the assessor's office. A common theme is new employees. We have one new employee in the assessor's office as well. So that's where you'll see a slight difference in the full-time schedule. Otherwise, Karen's been there as a principal assessor for a while, and we have one employee who's been there for, I think she's on her second year now. Yeah. And Tristan started right about, was it June he started? December. I started June, I'm sorry. I knew it was recent. I didn't realize, I thought he was here when it was warmer out, but clearly not. That's right, he started during the snowstorms.
He did.
Yes.
He commuted from Gloucester and the snowstorm.
Yeah. Yep.
Oh, boy.
That was his first day when we had the storms. I think it was like Monday and Tuesday. So that's what you'll see is the new salary level for the new employee is the change from the prior year on the full-time. The stipend remains constant. Miscellaneous contractuals, appraisals, these two lines, at least for telling the story, I have to take them together. It's the annual revaluation year for the town of Wilmington. So part and parcel with the data collection, as well as just all the fees needed to properly satisfy the Department of Revenue's requirements for revaluating all the properties in the town. It's a noticeable spike, but it's a necessity, as well as just where we hit on the recertification of the data collection.
And just to note too, that the Mass General Law changed, and they changed our recertification to every 5 years
Right.
instead
Yep.
of every 3. So this would have been a cost in fiscal 19 that we did not have, so it was delayed a couple years.
Yep. So that's when we look at the miscellaneous contractual, the biggest piece of that is just purely the data collection on the real estate piece, as well as the personal property piece. There's a couple small pieces in there just for equipment service and repair, as well as just for any fees for the registry of deeds, for recording fees, probate research, anything like that. On the appraisals piece, that's where we start to factor in vision for the revaluation, the residential, commercial piece of that, as well as personal property audits. I think, Karen, you might want to talk about, as far as the gas entity, the utilities, that's one of the pieces that timing-wise, we need to reevaluate them, I think, in unison.
Yes, so the Department of Revenue came out with a new standard as to how, our utilities will be valued. They always used to be just the net book value, and the, Boston Gas, New England Power, Columbia Gas would just send a formal list and say, here's our net book value. So the city of Boston challenged that, and, they won, they went all the way to SJC, so there's a new methodology that's being, used. We have to supply the town, since they're locally assessed, we have to come up with an appraisal and a new method of 50/50 and part of net book value. So, no one has been trained to do that. DOR still really doesn't know how to audit us, but they've made it mandatory for certification communities that we need to, do this for fiscal '21. Seeing that coming and knowing that the, case had happened the last 2 years, I did Boston Gas the last 2 years, which we increased the value significantly. I don't wanna say underreporting on their behalf, but the different methodology was a definite increase to us. This past year, we also had to do, New England Power, and it was about $7,500 just to do those two, because we have to use a private consultant to do that. Our own personal property vendor, has not been able to even confirm value, what they would charge if they were to do it in fiscal '21. So for budgeting purposes, we stuck with the company that, the consultants that did it for us last year, as an estimate. So, we received the notice that it was gonna be optional. Now the Department of Revenue is saying it's mandatory for certification communities, so we've got to do that.
Now, does that affect Reading Light?
No.
Thank you. Brian?
All right, thank you. The next three pieces, as we look at under contractual services, are all level funded. After that, the cost for ATB cases remains constant at 20,000, and that's a tough number to put a projection on, but it's been a reasonable number to use working forward the last couple of years, it seems like. It goes towards just defensive cases, witnesses, et cetera, for any case that goes to the ATB. Again, you can't really project or plan on banking on a fixed number of cases that go there. It depends on a multitude of factors, but we do need to at least have the ability to defend.
Do we have any cases there now?
See, what was that question?
On the appellate tax board, do we have any cases?
We always have cases.
We always
yes.
have cases.
The minute they come off, new ones come on, because we have attorneys that's their profession.
That's what they do.
They file, annually, just file to protect their rights, and, typically before I'll get town council involved, I have conversations with them. Many of them do withdraw, without any abatement, and, but there always is a liability sitting out there. We just had 4 cases called up on, February, March, and April. So I'm hoping to get those, attorneys to withdraw as well without giving out abatements, but if we need to have an appraisal, if we need to have witnesses, et cetera, like Brian said, we have that as a cushion, and it's actually been really helpful to me with settling cases to say, you know what, we feel very strong about our value and that it's correct, bring it on, let's go to the appellate tax board if that's what you feel. And a lot of times, I don't wanna say call their bluff, but because I do feel that our values are right, but it will make them realize that the town's not in a compromised position that, oh, they'll never go to the appellate tax board because they can't afford it. So it's like, no, we have the money, we will defend our values, so which way we're gonna go. So it's been very helpful to have that.
Good. Thank you.
Thank you. The next line is training and conferences. That remains level at $3,600. Again, that goes to trainings, conferences, meetings for the regional and statewide assessors groups.
Mhm.
The training for the staff is very critical to help provide consistent training knowledge, especially for it seems like there's always changes to the law, and on some degree, someone with the state always trying to test the existing case law and see what happens. Printing and binding and advertising, that's also level funded at $1,000. That line speaks for itself. Office supplies, again, same story, level funded from the prior year, that's $3,200. The subscriptions and dues is slightly increased to $6,425.
One of the things I would mention there, maybe you want to mention the, yes.
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 Yeah.
So I want to thank you, because I know, looking at this history, it's like, wow, why did you go from 1,200 to 61 to 62? We had come to you and asked for money for the funding of a publication called CoStar, and it's all commercial properties. There's leasing information and sales information and just a wealth of information that I don't have access to, just like by Googling things on the internet. So it is a subscription to a service that provides great information. And just we had a case on Fordham Road. It had been lagging for years. Not lagging, that we had like multiple years that were hanging out there, and I was talking to the attorney, I'm like, we need to withdraw this. He's like, let's continue it, I'll talk to you on another day when you know, and so anyhow, so we continued it, and I looked up on CoStar, and it's like, it just sold for $27 million. So I called him back, I'm like, yeah, I'll be expecting that withdrawal. So, you know, CoStar won one court case, paid for itself, and so it has really been very helpful with us, especially in a revaluation year. The Department of Revenue looks not only for our local information but regional information. So when you ask about vacancy rates and rents and things like that, CoStar has all of that at our fingertips. Yeah, it's wonderful, and planning can use that for a lot of redevelopment stuff. We get daily articles that are very helpful. So I thank you for that. I know it's expensive, but it does work.
Thank you.
And that rounds out the extent of the budget for the assessor's office. I don't
Anybody
think
have any questions on the assessors office?
Yeah.
Thanks, Pam.
Thank you. Thank you.
Good night.
Next.
So on page 31 is the town council budget. As you know, we are with the KP Law. We've been with them now for, this is our second year. We're looking to keep the budget at the same level, which I think should be sufficient. We are on an arrangement where we're billed, you know, hourly for the number of cases. So it does fluctuate, but not dramatically. I think the largest monthly bill that I recall seeing here was something in the order of 16 or 17,000. That was during the the detox proceedings, and more often than not, it's in the category of 12, anywhere from 11 to $12,000–13,000. We are going to need some additional legal services, again coming from KP Law, but will be billed accordingly for cable license renewal. So Verizon is their license is due. Is it 3 years out? Verizon, I think
It's 2022.
Okay.
February 2022. Sorry, I had to remember the date.
So they have they're finishing up on their first license, which was a 15-year license, and typically license renewals are for 10 years. But Carrie, you want to talk a bit about
Yes,
that?
I guess now with the change in people streaming television services or internet services rather than buying cable services is becoming a dinosaur. And apparently Verizon is looking at how much do they want to remain in the business of providing cable TV. So what they're trying to do with different towns is give 180 days notice that they're just going to cancel. What they wanted to do is cancel on the spot within the month, and there's been a lot of pushback from the attorney, so that at least we'll get 180 days cancellation notice. And what we will also ask for is that all the payments under the terms of the contract for capital or for the fees would be paid out if they do cancel. Comcast isn't taking the same approach. They're still negotiating about a 10-year contract right now, but that might change as things go forward. So really it's the baby boomers that obtain cable services, and as people age out, they're getting the streaming services. I know, my kids just have streaming services. That's all they have.
Verizon just came out with a plan, and depending on the speed you want, internet only, so you can do the streaming services.
Yes, I heard of that.
Comcast subsidiary is NBC, and they're starting their own streaming service. So it's gonna be interesting in the next couple of years.
It will be. So we do have a plan for how we're going to approach the negotiation with Verizon. I think we're in good shape. We have a good existing contract right now, and we'll talk with WCTV and also have a survey to see what people are looking for, what kind of capital needs does WCTV have going forward. But I feel pretty good that we're in a good place right now. It's just how long is Verizon going to stay in the business? It's really something that we are not sure of, and of course it does impact the residents of the town too, depending on what happens. So it's very unpredictable right now, but we'll put our best foot forward and get the best deal that we can in the contract.
Have they approached the town at all about 5G?
I have not seen anything, but it could come up during the negotiation.
Because that's possible where they're going to flip it to, where they'll get away from wires and then just look to deliver streaming via 5G. But they're going to need a lot of planning and certainly a lot of conversations with you around whole access and things like that.
Sure. It could come up during the negotiation, so I'll keep you updated too, keep the FinCom updated on that.
Thank you.
So that is a cost, the cable relicensing process that, we don't typically have on an annual basis, but there will be legal costs associated with that over the next couple of years. The other category that this includes is the cost for legal services associated with Olin and NET, New England, trying to blank, New England Transit. I'm having a block here, but essentially the outfit that was looking, New England Transrail. Thank you for jogging my memory. How can I forget? So we are using the services of Brooks and Durensis. You recall that they were part of the firm that we had prior to KP. Dan Deutsch is the individual that specifically has been working with us for probably almost 20 years now, and he certainly has been the key player, has the institutional legal knowledge, so the board saw fit to name the firm as special counsel for those specific projects. So, and that's, there's ongoing activity, certainly on Olin, because the EPA is working with them to reach a point where there will be a preferred course of resolution to addressing some of the contaminants. In fact, I believe the EPA is supposed to issue a report here in the spring that will identify what they believe to be the proper courses going forward. It seems, from what I'm gathering, that there's been a détente of sorts with Olin. For a while it was rather adversarial between EPA and Olin. It sounds like, from what I'm gathering, there's been a greater level of cooperation, which is hopefully plays out. So we continue to receive correspondence on a regular basis. with regard to these reports that are prepared either by Olin's consultant or by EPA. Everything is sent to council. We also, separate from that, have a consultant, GeoInsight, who will review the technical reports and provide any comments to EPA. So will continue to be an ongoing process.
Is the detox still an ongoing process at this point? Legal bills?
It is. We aren't seeing the level of activity at the moment, but there is some. So part of the costs associated with the detox now are being borne by insurance counsel, because once we were sued, we filed a claim with our carrier through the Mass Municipal Association. So some of the costs are being borne by insurance counsel, but we still, when necessary, will have town council participate.
Is KP also representing the water department too?
Yes.
Okay.
Yes, and so the way it works when we get, when I get monthly bills, it's broken down. Items that are associated with, whether it's procurement related to water items or anything water, it gets billed to the water, charged to the water department.
Okay, thank you.
Where is the funding for the extra council, working on Olin and stuff like that?
So that's all included in that 300,000.
Is it?
Yeah.
Any other questions on town council? Next.
I think we'll skip up ahead to 60. Page 60, which will be the beginning of the maturing debt and interest. The budget here as a whole has actually gone down a little bit. The biggest piece of the decreasing debt here is the high school. If you want to look line by line at it, the only increase was just the two small MWRA projects for the sewer department that are now on there. Those are on page 65. They're interest-free. It's basically $10,700 for each of the two loans over the next 9 to 10 years. That's the only new long-term debt that's presently on the books from the year before. The debt, as you look through, again, this is the same layout as I'm sure you've seen before, but one of the key aspects of the way the debt's scheduled is the debt does taper off, most noticeably on the interest side of it. But the way the debt's been scheduled and structured is to essentially to trend downward over the length of the borrowing. That does allow you to at some point begin to backfill and take on more debt to fill in the gaps of where the debt starts to fall off the books and maintain a level funded item in the budget going forward. Here there hadn't been any new debt short of those two small MWRA borrowings. The only piece worth noting too is a slight increase on the interest on anticipation notes, authentication fees, and miscellaneous debt. And that is to, actually for a couple different components. One is to take on if there's any new bond ratings work that's going to need to be done for any future borrowings in the year, as well as, I guess it's really more for FY20, is just the piece with the short-term note, the State House note that was taken out for the water main project, or the water, was it water tanks?
Yes, water tank.
Water
the
tanks.
tank.
Yeah. So otherwise, the debt's pretty straightforward, and then it's spelled out at a high level between the town, the couple of school projects, and you get the detail of each project. As you can see, there are some projects that are going to start falling off the books after FY21 as well.
Any questions on maturing debt and interest?
Has the water department started that new tank, or?
Oh, yes, yeah, so Nassau Ave, the tank up on Nassau Ave, they have constructed the new tank. The old one is remaining at the moment until we transfer antennas and so on off it, but then, in fact, I think it's in this budget on the water side to, is funding to demolish the old tank. So as I understand it right now, there's some testing that has to go on with the new tank before it's, activated.
Yep.
Any other questions? Seeing none? Next.
All right, next up will be on page 69, unclassifieds. And to piggyback a little bit on what Kerry had talked about earlier as far as essentially the aging demographic of the workforce for the town, one of the byproducts of that is an increase in sick time when an employee retires. Essentially, that obligation has increased. It is, in comparison to other towns, it is under control here due to measures that have been taken over the years before to limit the amount of payouts and payout at a fixed dollar rate as opposed to essentially someone's per diem, which is a very noticeable
Right.
steadying factor in the budget.
So that just for your information, the contracts establish, there's some difference between contracts, but essentially it's a fixed amount that the town will buy back unused sick days. In the case of the ASME contracts, it is 240 days at $55 a day. I know the amount, the maximum amount someone could get in buyback is like $13,000 if they had maxed out. It differs in each of the contracts, but it's a fixed amount per day they can buy back up to a limited amount. So we try to anticipate who's going to be retiring. Obviously, that's somewhat difficult, but
Yeah.
we do our best.
Jeff, what contracts are up for renegotiation this year?
Well, let's see. So I believe we are in good shape right now. We have the police superiors. Their contract expired July 1 of 2019. We were in negotiations with them, and it's been tabled. We kind of got essentially reached a sticking point, if you will, and now it looks like they may be going through a decertification process. So that contract is the only one that's open right now. I think we're good for another year, and then we're back into discussions with the AFSCMEs, if I recall.
Okay.
So the ones that were most recently negotiated was the NEPBA 1, which is the police patrol, dispatch, which is also an NEPBA group, and then we were looking to deal with, work with the superiors.
Yep, okay. Thank you.
All right, the next item in the unclassified budget here is just the Medicare contribution on the employer side. This is a fixed percentage based on salaries, with salaries increasing year over year. This figure tends to follow the trend of what the salary payout is. That's why we had increased it up to $882,000 just based on using the 1.45 based on what
Yeah.
we're projecting for salary. And that's also, you need to provide a little bit of cushion just to take on for potential new employees as well. Just if there's any new positions in there, you just
Yeah.
have to essentially account for that. The next line is a salary adjustment and additional cost piece. This is down slightly from the year before. This does tie into what Jeff had mentioned as far as the open negotiations with unions, and where that ties into is potentially looking at paying retro for potentially 2 years' worth of any pending settlement.
Which is a lot.
Yes.
Mm-hmm.
The local Training, conferences, transportation, that's been a fixed figure for a while. The 5,000, that we believe is reasonable and fair. The out-of-state travel allowance is set for 7,000.
Yeah, that's, in some years, that's been, I have not done this in the last year or two, but I've attended the ICMA conferences, which are, the last one I went to was down in Charlotte. It's usually a 3 or 4 day conference, and so this covers the costs associated with that.
The line for the annual audit reflects the agreed-upon contract, where it had basically increased $1,000 each over the past couple of years. That matches dollar for dollar with the agreement the town has signed with the outside audit firm. The figure on the ambulance billing piece is just based on a slight projected increase to the costs on that piece. The town report and town calendar remains constant at the $7,500, just due to the costs for printing on the.
Yep.
Professional and technical request is to go up from $125,000 up to $140,000. The thought here is there's a couple pieces where it actually ties into some degree what we discussed earlier with Munis and the payroll piece.
Okay.
Just having some sort of technical expertise to help hold our hands and get us through some of the key conceptual pieces of the project to make sure it's designed beneficially for the town. And a lot of that forethought, as I mentioned, is critical on the payroll piece.
Yeah, I would also note that one of the things, in fact, I just became aware of this within the last couple of weeks, but there's some ongoing testing, or the hope is that this will conclude the testing, but we had a few years ago a detection of some contaminants, small amount of contaminants. I believe it was petroleum base, but it was in one of the garage bays at the DPW. So the material was removed. It was contained in a limited area, and there's been some testing done since then. But there's a DEP protocol as to continued testing, and I learned just recently that if we have these 3 particular tests done over the course of the next I believe about 6 to 9 months, one would be in June, I believe the other one would be 3 months after that, and then the following 3 months after that, and the tests come back below certain thresholds, then we're done. We wouldn't have to do any more testing, and each of those testings is about $6,300, $6,400. So that's something that we had not has not typically been in this budget. One of the categories that is in the professional technical is the cost associated with GeoInsight for their ongoing work with us on the Olin project.
Okay.
All right, and the next line in the unclassifieds here is level funding the budget for the reserve fund at $1.2 million.
Any questions on unclassified? No? Seeing none?
All right.
Next.
Okay, the next is insurance. What I tried to do this year with the budget is align the budget with the way that we actually get billed. We don't receive a bill for automobile liability, boiler and machinery, or umbrella. That's all part of property and general liability. So I tried to bundle it together to show you going forward a more realistic picture of what it looks like for the actual costs and what we're projecting. So that's the reason for the changes. As far as workers' comp goes, well, our public liability, I mean, our actual costs are closer to the 85,000, so that's what the differences really are. I've tried to put them in line with what the bills are that we've been paying. And in the past, it's been more guesstimates of breaking down those amounts, so I'm really trying to give you a better picture moving forward. So that's why the big jump. It doesn't mean that all of a sudden we had a big increase. I just want to model going forward a little bit better for you.
Okay.
So public liability has gone up just a little bit. We paid about $80,000 last year, so we increased that slightly. Workers' comp, we kept the same from last year. We do, as I mentioned a little earlier, have a number of workers' comp claims. We've had a lot of injuries. The safety committee has been talking about, all the injuries, and are people paying attention? When you're bending over, are you bending the right way? Are you just bending over? Are you stooping down? So I think DPW is really, and public buildings are trying to reiterate with the employees, these are the things that you have to do to stay safe. But we do have an aging population also. So it's a combination, I think, of some of the people's age and getting hurt on the job, being a little bit older,
Yep.
then, and also being careful when you're doing things, so.
And rising medical costs itself.
Exactly,
Mhm.
exactly.
Yeah.
Even though all of our costs get rated,
Mhm.
they are rising, you're right.
Yeah, they are.
You're right. So we kept the workers' comp steady. Automobile, as I mentioned a little earlier, is included in the property and liability, as is boiler and machinery and umbrella. So they are pretty close, with what they've been in the past when you add them all together.
We
And-
did have, if I recall, recently, did Maya re-rate some of our buildings?
They did, they re-rated some of the buildings, and that was an adjustment, and they'll continue to do that. We're also, when I meet with the rep, we're looking at any vehicles that we're paying too much insurance on. They pass that point where you wanna have replacement costs, so we're gonna do more of that going forward, just really scrubbing the insurance listing. We have a lot of vehicles, and we're gonna start looking at every single decision to see if we can have an impact on the bill.
Seeing you opened up the subject, do we have too many vehicles?
I guess I can't totally answer that question for you, because I don't drive one, but, I don't know. I don't know.
Okay.
I think that, I see the vehicles that we have here. When we were sharing vehicles, there was a lot of pulling, of vehicles every day, and people dropping off and picking up keys, and,
Okay.
but, I don't see what happens out in other departments, so I really couldn't comment to that.
Yeah, that'd be, something probably could look into, is our fleet of vehicles. Do we really need as many as we have?
Yeah, I think that's certainly a question that's come up in the past, and, it's of course a question worth revisiting, I guess. It's, when you look at the departments with the largest portion of the fleet, it's really DPW, police, fire, to a lesser degree, public buildings. Those are the major categories of vehicles.
So, something we could look at.
Great question. And again, and then we go to the accident for the fire and police. That was increased a bit, because as you can see, last year's actual was just under 122,000. And I didn't mean to skip over the bonds. The bonds are bonds like for your treasurer,
Yeah.
collector,
Public
and the
official, yeah.
overall insurance for the town, to protect the town. As far as health and life insurance, we've gone up 195,000, which is 1.5% increase. Last year, we kept the amount the same, of 13 million. Right now, with our current trend of making our monthly level funded payments, we are in a good spot right now, about 1.2 million. And we hope that it continues. Last year, we ended the year about 581,000 to the positive for our level monthly payments. So we're in a good place right now. It's just how long will we be in a good place? You just don't know. This year, we do not have any high-cost claims as yet over the stop-loss amount
That's good.
at all. We have none. So this is really going well this year, but certainly it takes a while for all the claims to come in and the claims to run out. So I'm trying to keep an eye on that, but we're in good shape right now. So we're just riding the tide, I think. The Blue Cross will be coming in Thursday morning to meet with me again to go over what the rates look like, and then the IAC will be meeting in early February to discuss it and bring the recommendation to the town manager for setting the rates. Last year, we kept the Blue Cross Blue Shield HMO and PPO rates the same. So everyone saw level funding, which was very positive for employees and for the town. And the MedX renewal this year, we, as you may recall, last year, we eliminated one of the plans, the MedX 3 plan. So now, all we have is the MedX 2 plan, and that includes the prescription drug plan. So this will be the last year that we just filed for 2018 calendar year, that we had the retiree drug subsidy that we had to pay. So we just got the money back from that, and we won't have to do that going forward, because we have the PDP, which is positive, because we're not absorbing all of those costs. The MedX rate renewal just went up slightly. It was $83.60. We went every month for the retirees to pay their portion, and it's now $84.15. So it went up very, very slightly.
Anyone have any other questions on unclassified insurance? Seeing none, next.
All right, next up will be the statutory charges. This is a mix between a couple obligations, assessments, as well as the cherry sheet items. The overlay has been budgeted consistently at $900,000, and that's a reasonable number to allow for any abatements as well as any just coverage for that office in case there's any settlements or cases that go against the town.
Also covers the senior tax work on it.
It's also designed as a buffer to include, exactly as Jeff was saying, the funding for the senior work-off program. The next item is the Middlesex retirement contribution. Jeff alluded to it earlier, is up about $513,000 over the prior year. And unfortunately, that's just the reality that we have, is that it's going to continue to go up, and the town has been taking steps to try to curb it. We can talk more on the next page once we get to the warrant articles. The offset items, this is a piece that it's literally just an in and out on the budget. We have the money that comes in on the local aid side of the $28,258 for, I believe it's a library, and then it comes right back out on the cherry sheet. So that's just to account for that as a net zero impact. MBTA cherry sheet charge is we had budgeted at $546,380 based on trends and everything that we've seen. That's in line with the original estimate we saw at the end of last week after we went through this exercise.
Will that be going up? Because isn't the MBTA going to be putting stock in front of Market Basket? I saw that someplace.
You know, I don't know how that, or if that will impact this. I don't know. That's-
It's right outside CVS.
That's
right
Lowell
now.
Transit, Lowell Regional, okay.
Oh, you're talking about the bus?
Yeah.
Yeah, I was gonna come
When
up
did
from,
that,
Woburn.
I thought they didn't even come into Wilmington.
The
They
Lowell
have
comes
to-
in, it comes into
No, the Lowell
the
does,
train.
but
Yep, no, I saw something, it was either online or in the paper that they were gonna put a,
Yeah, I don't, I do recall that as well, and I don't offhand know the particulars. I'll have to check that out.
okay, thank you.
Well, Lowell bus stops there.
Yeah,
now.
Lowell does, yeah,
Right.
yeah.
So where would the MBTA bus go?
I have no idea.
We'd just be
The
riding the
bus
bus.
Right around,
I have no
wheels
idea.
on the bus.
Charlie never got off the train, so. All I know.
Get that.
Charlie bus. Okay, I'm confused.
The next item is the charge for MAPC.
That's the, Metropolitan Area Planning Council, which
Yep.
we're a member of.
Yep, and that we have it budgeted at $12,900 Again, just a slight, small percentage increase over the prior year. That's been a pretty stable figure. As well as the RMV non-renewal surcharge, that's been fairly consistent. We have a modest increase budgeted for 692 as a total on that one. The Metro Air Pollution Control District figure is another one that has small nominal gains, so year over year, we have that budgeted for a small increase.
What is it? It's
It's-
mandatory charge, and I spent days and days trying to find that out after
Yeah.
town meeting.
I
I
remember
called
that, yeah.
many people in the state, and no one knew what it was. But it's mandatory, so I
By
went
every-
back and looked at the legislation, and it's years and years ago it was created, and everyone was enrolled, and it's a required assessment, but honestly, no one could tell me, so where.
Where does the
one-
money go?
Who was the person in the code?
Probably somewhere in the EPA,
Yep.
they have it.
I spent days just trying to call anyone and get a person that could tell me, can we opt out of this? You know, is this an optional? And
There's one
it was-
individual who's worked for the state for 48 years who's in the bowels of a building.
Salary.
Yeah, the next item is the mosquito control program. That's another item that has modest gains year over year in the assessment. We have that at 70,565.
Did you not get your MWO?
That is now in the enterprise fund
Enterprise
with the
fund.
sewer.
Oh, that's right.
Yeah.
yes. Oh,
So-
oh.
So we have to strip that out. It's the offset of where you see at the beginning of the local charges for services, the 3 million roughly, plus the cost of the operations to the sewer, so. So that's why that number just plummets there, is we have to pull that out. But that number is expected to be in the same ballpark as it has been before, but just now,
Yeah.
as part of the enterprise fund.
Could we just make a notation on that for
Mhm.
future years?
Yeah.
Noted.
So that we don't have, until all these years drop off.
Can I back up here for a minute?
Sure.
The RMV non-renewal surcharge, what is that? Why do we pay it?
'Cause we,
The- I was gonna say, I think it's the state when they collect. Is this the one with the?
no, so that's when you know how you have the ability to put people on hold
Flag.
Yeah,
for their motor
For ex-
vehicle
yeah.
excise?
Mhm.
That's what you get charged based on the number of
Mm.
holds that go.
yeah,
For your excise tax.
yeah.
Mhm.
So if they don't pay their excise, they get so many bills that they receive, and then
And
at
then
the
they-
end, you, like, red mark them.
When-
Yeah,
in the
when-
registry.
When you
They-
go when you go into the Registry of Motor Vehicles database, it shows outstanding parking tickets and outstanding excise tax
Mhm.
Yeah.
per community. And that's
And then
the
they
fee that they
collect
charge
it,
to
yeah.
put it on.
Right.
Yeah.
Yeah. Mhm. It's like $20 on the
On the
person's.
bill.
Yeah, the person's bill, so when they come in and
Yeah.
you take $20 off, you have to
That's
have a
right.
motor vehicle excise.
Yep.
Yeah,
So-
so it basically.
Why do we have to pay it?
Because
This
it's,
fee.
they're helping us collect.
Yeah.
Helping you collect.
Right,
They're providing the
so you don't
service.
pay, you don't pay your bill, the
I'm not
motor
gonna-
excise, right? You don't pay in time and it's gone for like 12, 6 months or whatever it takes.
Mhm.
They'll put you on hold. That means you can't get your license, you can't get your car registered, you just can't do anything until you come here and you pay Wilmington or go to the collector.
Or
So
get a
that
better
they
pair of walking
charge,
shoes.
right,
Yeah.
Right.
they charge us for that. All the communities.
Jeff,
Why isn't that a private issue between the owner of the vehicle and the registry of motor vehicles?
Because the town is the one asking to
Because
put the
it's-
hold on.
yeah.
The
we
town
want-
can't
collect
place a
the money.
lien
We
essentially on the
collect the money.
vehicle.
It's
the
a
money
su-
comes to us.
Right.
They're helping us
Yeah.
collect it.
So
Yeah.
really is providing
Collecting.
greater leverage to the town
Yeah.
to collect, to get that money, because essentially if they don't pay up at some point, they don't have a ability to drive. They can't get their license, they can't.
The license becomes non-renewable and their plates become non-renewable.
Mhm.
Okay.
So,
Jeff, I have a question about the registry. It's not necessarily about this line item, but it was my understanding, I may be wrong, that when they would come into a town, they would sign a 10-year lease. and then they would look for another town, so that they weren't always situated in just one town.
Yeah.
Is that true? And if that's the case, how long have they been in Wilmington? They've been here at least 5, 6, 7 years?
Like more.
Yeah,
They can renew.
I don't know
Yeah.
the particulars on that. I'd have to check.
They were in Stony.
Reading.
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 The longest.
Yeah. They were also in Woburn there,
Because
too.
when they moved into Wilmington, they left Reading apparently because they had been there for X amount of time and they wanted to go to another community and just keep moving around so that,
Yeah, but there's specific
They've
things
been
they're
in
looking
Boston
for. One
forever.
is, like transportation, because you got the train
Mm.
station there and stuff like that, so.
yeah.
It's,
They've been in Lowell forever.
Yeah.
I know, I was gonna say they're in.
Lawrence, too.
Same with Lawrence, yeah.
Mm.
I guess
Springfield.
They must be pretty busy in those communities.
Yeah.
Okay, well, maybe they're here to stay.
The next couple, I just want to take them basically in combination because they're the most volatile in comparison to the other state assessment cherry sheet charges we see. And that's for school choice, for charter school, and then on a smaller scale, the special ed education assessment piece.
How many students do we have in charter and in school choice?
I don't have the firm. I could try and research and get the figures from schools. Again, I talked to Paul before we put figures on these. I don't know the offhand.
Mm.
What we currently have, the trick is to try and project out about a year and a half too, which is the
Yeah.
challenging piece.
Yeah. If you could find out, I'd appreciate it.
Yeah.
Because you're right, it does go up and down.
And then the last one there is just the assessment we would get for anyone that's going to the North Shore Agricultural and Tech School as well. And that's another one that does vary, obviously depending on the number of students enrolled in there.
On the North Shore, am I incorrect in assuming that they can go there if our current technical school, Shawshene Tech, does not offer the program?
I believe so. I know that we also have some students that go to, I believe it's Minuteman. There's a
Minuteman, yeah.
handful of students that go there as
Yeah.
well.
Yeah.
I think they need to come to an agreement with the school district. Again, I'm not the expert on this, but I believe if they go to a program or a school that doesn't have a program offered locally, as we would then cover it for them to go
Yeah.
to.
And I think at some point in time, it had to have the sign off of the superintendent.
Yes,
Yeah.
Mhm.
yes.
Any other questions on statutory charges? Seeing none. Next.
Next is the warrant articles.
So this first one, it's been here for quite a number of years. We didn't have to adjust it last year. It covers the costs for Memorial Day preparation of the flowers and so on, and Veterans Day, Lou Smaglier puts together for us. The next one is the lease of veterans' quarters. We still have, in fact, I received a letter from one of the groups requesting their $750 for the coming year. July 4th, this is, as you recall, from a few years ago, we started supplementing we're budgeting to offset some of the costs that we incur during the July 4th festivities, primarily for police, to some measure public works, but it's largely police.
The next piece is the $1 million will go to the OPEB trust fund. Again, that's the same as it's been the past few years. Currently, we have about $6.6 million currently in the trust fund. Just at a very high level is the most recent assessment of our OPEB obligation is down about $9 million. And that's in large part to some changes in assessments. Getting rid of the MedX 3 is a big help on that. They had changed mortality tables.
Okay.
That also we got some sort of benefit out of how that slots in there, and then we did lose some ground just based on increase of number of employees, or number of participants, both active and retirees as well. So that's all the levers really that help make up that obligation, but adding the funds to the OPEB trust fund does give us some degree of relief, as well as the interest that that program or that fund does grow. The next piece is the transfer to the capital stabilization, which, as you can tell, is down from 4 million down to 2 million. I think this dovetails a little bit with the increase in capital out of pocket, essentially. In the budget, the capital stabilization ended last fiscal year at a little over 10 million, with the transfer in FY20 of another 4 million. That would bring that balance up to 14 and change, with the interest that does accrue in that stabilization fund. And that is one of the benefits of having a stabilization fund, is the interest is the fund zone, as well as you don't have to wait on free cash to be certified from the DOR to potentially use it. You have a higher threshold on a vote to use it, but you do have those other added perks as well. The last two, I believe, also need to be taken in conjunction. The retirement stabilization was decreased, actually just flat out moved into the prepayment of the retirement. We have been feeding both channels basically to help defray our retirement assessment, and the biggest bang for our buck we've seen is going through the prepayment route most recently. Is in speaking with the retirement board. The last, basically, if we look back at the impact from the excuse me, of the 1.5 million prepayments from 18 and 19, is the benefit we would gain on the assessment on the back end is about $3.4 million.
Okay.
So we're paying today's dollars to offset essentially $3.4 million down the road.
It's a great idea.
So we decided to direct more of our efforts into that, and hopefully see a reduction the next time that we get our assessment determined from the retirement board.
When is that due?
The
The
next
assessment?
it's, they do it every other year. I
Every
think
other-
we're.
Yeah, we had our
Bring it
figure
down.
for the 7 and change, and the 7.5 came together. We're going to FY21 is the 7.5, so we'll then get 22 and 23 at some point during FY21.
If we can go back to OPEB for a minute, have you seen what Andover is doing to help alleviate OPEB?
You know, it's interesting you mentioned that. Jonathan Eaton had sent me something that he picked up at the MMA. It was, and I didn't quite, I couldn't read it on my, he sent me a text, so I'll have to call Andrew, is it Andrew Mailer? No,
Flanagan.
Flanagan, in North Andover, in
Andover.
Andover.
Andover, sorry, to inquire as to what they're doing. I'm not aware of.
It was basically in conjunction with the municipal unions, and they take 1% voluntarily. The employee gives up 1% of their salary to go to OPEB, and if they decline to do the 1% assessment, they would lose their 2% cost of living raise.
Oh, okay.
Wow.
Really?
Yeah.
Interesting.
How'd they get that?
I
Yeah,
have
what
no
else did they
idea.
offer?
I
I was
have,
gonna
say.
I have no idea, but it's an interesting approach to reducing that.
Yeah, I think they had some issues with the union before. I think it might have been a different issue. I think it was with the union as far as just trying to adjust the employee contribution share as well, because leveraging that would then reduce their obligations as well on the
Yep.
OPEB front.
Yeah, so, yeah, you might want to give them a call over there and
Yeah.
see how they did it. You know. Any other questions on warrant articles? Seeing none? Next, Brian?
The next thing I just wanted to touch on briefly is if we just skip ahead to 78 and 79. And these are basically placed back to back just as they are the enterprise and potential enterprise funds, just at least to place a budget in there. The sewer line here, besides the revenues which you'd see from the charges for services that we had pulled out earlier from page 1, is what we're looking at potentially for the revenue. I won't speak in great detail to the personnel or operations piece of it, but then you'll also see the MWRA sewer assessment in there for one of their expenses as well. And we want just to list the sewer separate, as well as continue to keep the sheet in there for the public rink, which I believe it was before FY17, I believe it had been voted as an enterprise pending potentially coming to an agreement for the existing rink in town, and essentially that would trigger the creation of an enterprise fund to address the operation and expenses of the rink. Jeff and I had talked about this for a while, and we essentially just agreed to keep this in. This has been in the budget book the past couple of years. Though, as you'll see, there's been nothing expended in the history of this enterprise fund, just because it was very narrowly constructed for the existing rinks being purchased by the town and then taken on for operations. But we did feel that we didn't want to handcuff ourselves by not including this in case any situation changes between now and then through FY21, just to make sure that at least the budget has been vetted for a potential enterprise fund for rink operation.
Right, but wouldn't this be specifically for the current
Yes,
rink?
just for the Restucia rink.
Yes.
So
Okay.
it is in the event, which I suspect is rather a long shot, that the town was to reach some kind of arrangement to acquire the Restucia rink, and to this would essentially have the tool in place for us to, once revenue started coming in, those funds would go to an enterprise fund that then could be expended out of that account for supporting that endeavor.
I thought the rink was sold.
It has been sold to Mr. Gallant, and like I say, I think it's probably a long shot that the town would be in a position to acquire it, but I guess at the end of the day, my thought was no adverse impact to the town in continuing to include it in here, and like I say, in the unlikely scenario that the town finds itself in a situation where it's able to acquire the rink, then this tool would already exist. The town would be authorized to expend up to $526,000 from the enterprise account, but I'd say it's pretty remote.
Yeah.
And who was it sold to?
Richard Gallant, he's pretty big in the ice rink business, so to speak. There's a rink over at the Merrimack College that I think he's put a fair amount of money into in the way of a donation, and I think it's named the Gallant Rink.
Yeah.
But he has a number of other, he's got a league basically, or maybe even more than one league.
Now, is the same guy still running it for him?
Yes, so when he purchased the Restucia rink, Mr. Rotundo, Mr. Gallant purchased the rink, including the lease that Rotundo is currently operating under. I forget now how many years remain on that lease, but Bob Rotundo will continue to serve as the lessee for some period of time here before I have to decide how to go forward, I guess.
Any other questions on the rink or the sewer? Enterprise? Seeing none. Aim next, or?
I think
that's all we got for tonight.
Yes. Thank you. Appreciate it.
Thank you.
It's been got a lot accomplished, that's for sure. And Thursday night, we've got planning and conservation, building inspector, board of appeals, and board of health, so. Next on the agenda is the school department. Has everyone gotten the documents that Dr. Brand had forwarded? Various members of the committee had asked for some information, and I had contacted Dr. Brand, and over the past couple of months, this is what he has forwarded to me. Yes, he got it.
You got it. It was in
Yeah, Chris gave them to him. I don't know if everyone's had a chance to look at them, or...
Which one, is that the you're looking at
It
the
starts
memo
with,
from
it
the
starts with
school
this,
committee?
yeah, it starts with this one.
Mhm.
So. Any comments, questions, concerns? And as you can see on the CARES program, that's gone down by a couple $100,000, because we had a concern last year that there were over $1 million in that account. You know, it's 800 and some odd thousand. Yeah.
Right, but it's just because of the timing too, I think, of the year.
So, it's 733, 326. Yeah, but this is all their revolving accounts and what they are right now.
Okay.
And they also gave a description of what CARES actually is. There's also a breakdown of the athletic budget. And also I'd asked if they had any monies from previous fiscal years that had gone unexpended.
Yes.
Yeah,
Yeah.
so.
So on a one, I know we do the breakdown, he does the breakdown of CARES, but we still have a sentence in here for the last few years. It has also provided relief to the school department's budget. Can we get clarification on what kind of relief?
Yeah.
I wonder if they're talking about
I don't know if they're
some of
talking
the
about
electricity costs,
or, yeah.
as well as half of the technician's salary and the cost of a custodian, but I agree with you, that's not.
It's a broad stroke.
It's
And at
not
one time, they
specific.
also put in some AC units inside the classrooms, too,
So-
so.
Can you just say?
I will contact Dr. Brand and ask him those questions.
See, because the next sentence that follows up, the CARES program also pays for some electricity, it's its own.
Yeah, and it
Yeah,
it's
says,
unclear.
yeah, it does pay for a half a technician's salary.
So
and-
just to get clarification on what he means by that.
I will email him in the morning.
Thank you.
Okay, so I have the FY19 balance, and this sheet is over $1 million
Yeah, it is a million.
as of 9/12. And, so that's 9/12/19, but then 10/31/19, it's down to 7/33.
Yeah, it's just timing. Yeah, that's all, he'll go back over.
Well, actually, the
Yeah,
fir-
but
the
it
first-
just seems like
the-
it's still maintaining at a very high.
The first set of numbers came
balance.
as the end of June 31st of last year. And that was
Yeah.
what was presented to the school committee in September. Okay.
Right.
I'd requested for the numbers as of 10/31.
Uh-huh.
I emailed him in early November.
Okay.
Still concerned with the overall excess
Yeah.
in that account.
You know, but, you know, you finish reading at your convenience, and then we can bring it up when we meet with the school department.
Yep.
Okay, in March. Next on the agenda is the minutes from September 26th. Has everyone read them?
Yep.
Entertain a motion.
Motion to accept the minutes as presented.
Is there a second?
A second.
Any discussion? Being none, all in favor?
Aye.
Opposed? Passes. I do have one housekeeping article, and that is Teresa, Jonathan, and myself, we're up for renewal this year for our appointments. And if you can get an email into the town clerk and a copy to myself, we can get that taken care of. Okay. Then that'll go before the appointing committee sometime after town meeting. Anything else, Jeff, or Kerry, or Brian? No? We all set? Okay, entertain a motion to adjourn?
Second.
Who's gonna make the
Oh,
motion?
motion. Sorry.
I'll make the motion.
A second.
All in favor?
Aye.
We're out of here. Thank you, everyone.